In terms of Europe, my best guess is this. Just really in terms of this pair, the Euro-USD, my best guess is this. The main question that the market's still pondering and the market still does not have an answer to is this. You might say if and when will Spain request a bailout? Or you might simplify it and say, when will Spain request a bailout? The Spanish government, that is, Prime Minister Rajoy and the folks in Madrid. When will they request a bailout? It hasn't happened yet, and we can talk. I could probably spend the rest of the webinar talking about reasons why there's been no bailout request yet, but that, in my mind, is probably one of the one of the leading causes, if you will, behind why the euro is sort of stuck right now. Spain has, all the conditions are in place for Spain to do so. Well, at least some of them are with the ECB's bond pricing program, but Spain has yet to request a bailout. So that likely, I guess, a factor behind the euro being stuck for the moment. Perhaps there's a little bit of uncertainty about what happens with Greece as well. The so-called Troika report. Representatives from the European Commission, the European Central Bank, and the International Monetary Fund represent a group called the Troika. The Troika has been reviewing progress or lack thereof in some cases by Greece in terms of its austerity measures and reducing its budget deficit and such. That Troika report, this was reported about a month ago. There were reports circulating that the Troika report on Greece would not be released until after the U.S. election, which is next Tuesday. So that may be one thing the market's waiting for is the Troika report on Greece. The Troika report on Greece, when it's unveiled, could set the stage for what one school thought, which is a broader bailout program crafted or architected by the Germans, among others. I've seen chatter about like a bailout of Spain, a bailout of Cyprus, and possibly a restructuring of Greek debt. So one idea is that until we get the Troika report on Greece, nothing else happens. So maybe that's what the market's waiting for. And I mentioned that the fiscal cliff, before the U.S. fiscal cliff, we got a U.S. election coming up on Tuesday, and it's possible that the market's in a pause mode until it waits the results of the U.S. election. And Don, you said it best. I have to agree with you. It's to kind of sum all this up into one simple sentence, Don does a good job of it. Political clarity or lack thereof on both sides of the pond. For those who don't know what Don means by the pond is a common nickname for the Atlantic Ocean. So anyway, Euro's like, now I'm not saying the euro isn't tradable. The short during yesterday's London lunch session around 30.15, around that horizontal blue line, that was a very viable trade. A long around 29.30 at today's London Open, a very viable trade. But as you can see, given the price action of late on the Euro USD, very, very short, relatively short-term trades are the general approach to take to this pair, if you're going to trade it at all. So until we get some clarity on some things, we could see a lot more of the same on the euro. I'm going to go to dollar CAD now. A couple quick comments about the dollar CAD currency pair. This is a 4-hour chart for dollar CAD. It was, let me verify the dates. I like to get this right. Hang on a minute. I'm checking the calendar. I believe it was Monday, October 15th, if I'm not mistaken. Yes, Monday, October 15th. That was the release date of the Bank of Canada's Business Outlook Survey for autumn of 2012. So each quarter, the Central Bank of Canada, that's the Bank of Canada, releases the results of a Business Outlook Survey. And that was released somewhere in here, as I recall. So the fall 2012 Business Outlook Survey by the Bank of Canada. I posted I set up a blog post on that, showing some of the graphs from that report. Not pretty. Some notable deterioration in the outlook for Canada reflected from that survey, from that report. And ever since then, more than not, the Canadian dollar has been weak against the U.S. dollar. Now, there was one notable news event last week, which I thought brought potential to give some support to the Canadian dollar. In other words, to provide some sort of resistance to this pair. And it hasn't stuck. Now, what I mean by is the last Tuesday, the Bank of Canada announced its latest interest rate decision. The Bank of Canada's benchmark interest rate has been at 1% for something like 2 years or more. It's been quite a while. Now, it was not surprised that the Bank of Canada didn't change its benchmark rate. It left it. There was no change there. The rate was neither raised or lowered. It was left the same. The focus of the market that day was the tone of the Bank of Canada statement. Now, when interpreting the tone of a central bank statement, traders and investors usually think of two categories. Either the central bank is dovish or it's hawkish, or you might say more dovish or more hawkish. A dovish outlook or dovish tone, if you will, means the central bank is poised or seems poised to ease policy, to stimulate its respective economy, to lower rates or do more quantitative easing. A hawkish tone suggests that central bank's next move is likely to raise rates, to tighten policy, to take back some stimulus, and that's the tone that the Canadian Central Bank has adopted for some time now. It's a good chunk of this year anyway. And there was some speculation that the Canada Central Bank might show a less hawkish tone, maybe a more dovish tone. Well, that wasn't the case last Tuesday. Last Tuesday, the Canadian Central Bank retained its somewhat hawkish tone and still seems inclined to raise rates first as opposed to lowering rates. And you can see the reaction on the dollar-CAD currency pair right there. Dollar-CAD spiked down. Down obviously means the Canadian dollar strength. But yet, look what happened in the days since then. It's been more up and down for the dollar-CAD. Now, certainly part of that's a U.S. dollar story. We've seen some dollar weakness against other major currencies. That's nothing. But I find it striking that still hawkish Bank of Canada did not provide any support to the Canadian dollar. So as I speak, let me remove this. As I speak, we're the dollar-CAD for now finding support around the 99.60 to 70 zone, which you can see here put a lid on the dollar-CAD before that Bank of Canada decision last week, and was recent support here as well. Yesterday's low in the vicinity of that in that 99.60 to 70 zone. So I'm watching that Canadian dollar more than I have in quite some time because again the a Bank of Canada policy decision and statement which brought potential to support the Canadian dollar and prompt some more upside for that for the so-called loonie. It hasn't done so. Canadian dollar has tended to is weakened more than strengthened since that Bank of Canada decision more than a week ago. Now, technically you could look at this again on the 4-hour chart for dollar-CAD. You can look at this thinking, hey, we got a high here. Lower highs there. Perhaps we are due for at least a correction. Very possible. Very possible. But unless some things change, I see some potential for the Canadian dollar to weaken over time. Again, unless things change, and one of those things that could change could be the results of the U.S. election and signs of resolution of the fiscal cliff. Think about the fiscal cliff and its potential effect on the Canadian dollar. If the U.S. goes into recession, that ain't good for the Canadian economy. Last I checked, it was something like 70 or 75% of Canadian exports find their destination in the U.S. And so perhaps that's part of the factor behind this dollar-CAD rise of late is maybe the market's pricing into at least some modest degree the the whole fiscal cliff issue, fiscal cliff concern. And that takes us next to the dollar-yen currency pair. Anyone notice the yen crosses of late? We've seen some yen weakness. Oh, by the way, I've seen, I just noticed that some of these comments have posted to me or posted privately. So I encourage all of you to make those comments public. One private comment, I won't name the person who named it, doesn't matter. One says, aren't they working to change that with thoughts of pipelines to the West Coast? Perhaps. The idea is that the Canadians building pipelines at the West Coast would ship more oil to the likes of China, if I'm not mistaken, based on what I read about that in the past. Yeah, totally. But I mean that would certainly take some time for the pipelines to be built and the money flow to subsequently change. So back on the dollar yen. But by the way, very very valid point and very astute point there. Back on dollar yen here, we're still in the vicinity of an area. As I zoom in on this dollar yen chart a little bit, this is a 1 hour chart for dollar yen. I've got a hot pink colored line which is at about 80.12. The 80.10 to 80.15 zone has put a little in this pair. Did so on Tuesday, has done so recently, but specifically today, we're trying to break above it right now. What you see right there, that is the post Bank of Japan policy decision high. During Tuesday's Asian session, Japan's central bank, the Bank of Japan, announced its latest policy decision. And there was really no surprise there. The market expected something like a 10 trillion yen boost to its asset purchase program, which the Bank of Japan, I think the Bank of Japan announced 11 trillion yen boost, and that's what, if you translate the dollars, that's like 120 billion dollars or something like that. Anyway, no real surprise at the Bank of Japan meeting, but so when that happens, when the Bank of Japan at least moderately disappoints the market, does less than the market expects, the Japanese yen rallies, and yen strength means down for this dollar yen currency pair, so you see this dollar yen drop that I'm highlighting right now. Now, since then, the dollar yen has clawed its way back up, and now we're actually we're above that initial post Bank of Japan policy announcement high. So why is this dollar yen rising? Well, as I mentioned earlier with the dollar CAD, a somewhat firmer dollar of late is at least part of the story. But if you look at the other yen crosses, the other yen crosses are rising well. So it's not just the dollar story lifting the dollar yen. At least a couple of theories here, perhaps more, but at least a couple of theories here. One, in terms of why the recent yen weakness and could it continue? One is that the Bank of Japan, given its latest policy move, it did follow through and did announce a second quantitative easing program. They've done more than that, but a second consecutive month, that is. For the second consecutive month, the Bank of Japan has announced a QE program, a boost to its asset purchase program. That hasn't happened, if ever, in quite a long time. And based on that, plus comments from the Bank of Japan accompanying that announcement, plus comments by the Japanese government, you get the sense, at least I get the sense, that the Bank of Japan perhaps getting at least a little more serious about combating deflation in Japan. In other words, the Bank of Japan perhaps doing a little more to ensure we're going to get at least some inflation, perhaps enough inflation eventually, maybe not next year, maybe the year after that, perhaps enough inflation to meet their inflation goal stated earlier this year of 1%. So maybe the market's starting to price in the possibility the Bank of Japan is going to get a little more serious. Again, history's not on your side, nor are bond spreads, which meaning that given how low U.S. rates are right now and the prospect of a still very accommodative U.S. central bank, namely the Federal Reserve, there's still a real possibility that any rise in the dollar yen could be fairly short-lived. Another reason, and perhaps even a bigger reason, if things get nasty with the Japanese government, with the Japanese lawmakers, there's been a deficit bill held up in Japan, and Japanese government. Lawmakers there in Japan have been quibbling over, but have not yet agreed to a bill to fund Japan's government deficit this year. And in fact, Moody's, the ratings agency, commented on this during today's agent session. That's yesterday for some of you. Moody's said that that's this impasse amongst Japanese lawmakers on this deficit bill is certainly a credit negative. Of course, it's no surprise, and the ratings agencies often announce things a little bit later than the market, well after the market stuffs them out. But the point is this. So at least some of this yen weakness may be on the back of concerns about that. Japan unable to get its fiscal house in order, in other words. So anyway, broad yen weakness of late. And now even if we get above this 80-10 to 80-20 zone, which I've highlighted again with the hot pink line, there's some other notable technical levels coming up. I've got the 50 to 60 zone represented by the horizontal blue line near the top of this daily chart. You see the high established in around mid-June by the dollar yen, around 80.50ish. That's one reason behind that. Actually, if you zoom out a little further, you can see another reason. Okay, I've got a daily chart showing virtually all of this year's price action. Again, dollar yen daily chart showing all of this year's price action. And by the way, even if you don't trade the dollar yen, this is a decent guide or proxy to the other yen crosses. So if you don't trade the dollar yen but trade pairs like euro yen, CAD yen, Aussie yen, pound yen, whatever, it's worth paying attention to what this pair does. So again, the reasons for the line at 80.50, actually specifically 80.55, highs there and there, and even here. And then a low established earlier this year, swing low established right there. So this 50 to 60 zone has been important over the course of this year. But you may have also noticed this red downtrend resistance line. Let's take a look at a weekly chart for basis for that. And there you go. Weekly chart, dollar yen currency pair. That red downtrend resistance line goes back to the April 2009 high for this pair. So going back to the daily chart here, if the dollar yen manages, perhaps even tomorrow in response to the release of the U.S. NFP report, if the dollar yen manages to move higher and test that 80.50ish zone involving both the horizontal blue line and the red downtrend resistance line going back more than 3 years, really could be a sort of moment of truth for that pair. Again, I wouldn't be surprised that there's some Japanese yen buyers, some yen bulls lurking around that 80.50ish zone. And if you're short the Japanese yen, in other words, if you're long on one of the yen crosses, that's something to watch out for. Either that's a take profit point or perhaps what you're hoping for. Maybe we'll get on the back of the non-farm payrolls report. We'll get on the back of some news news developments out of Japan. Maybe we'll get a breakout move to the upside on the dollar yen. And Justin points out, and rightfully so, there's still a possibility of more easing by the Bank of Japan, and that's the point I was implying earlier, that when I said the Bank of Japan's might be getting more serious about battling deflation, that's what I'm talking about. What would they do? Well, they would ease policy further. They would do maybe a more frequent or perhaps bigger, or a combination of both, more frequent or bigger asset purchase program boosts or QE programs. One thing's for certain, the Bank of Japan has paled. Its efforts to stimulate the Japanese economy have paled in comparison to apples to apples comparisons to efforts done by, say, the U.S. Central Bank, the Federal Reserve. So, the Bank of Japan perhaps over time play catch up. Maybe they do. If they do, that could mean at least some upside for the dollar yen and some upside for the yen crosses. Still, I think the jury's out on that, but a real possibility. And I realize I got about 10 minutes in the scheduled time for this session. Yeah, so I guess I'm going to touch on reiterate a couple points I made earlier in terms of what's next for the currency market. Certainly, we got the U.S. NFP report tomorrow. I honestly don't expect a whole lot of meaningful price action in response to that. I mean, yeah, we'll get a move over the course of tomorrow's New York morning session if we get a notable surprise out of non-farm payrolls. But in terms of non-farm payrolls and its implications for, say, Fed policy, I just don't see it yet. I can't imagine the NFP report in the near term, at least, being a game changer. At least certainly in terms of Fed policy. You may recall when the Fed announced that its QE3 program on September 13th. It's an open-ended program. It's an open-ended program. There's no defined limit or cap on how many agency mortgage-backed securities the Fed's going to obtain, going to buy. I mean, it's dictated. The extent, the duration of the Fed's program going to be dictated by improvement in the jobs market, and one NFP number is not going to be a game changer for certainly for the Fed. Now, the market may react to it certainly, but it's certainly tradable from a new scalp's perspective. Again, I would if there's any pair I've been watching the most, it's this dollar-yen currency pair. Now, not that it's the easiest pair to trade immediately following NFP, but a technical break of that 80-50 zone, if we get it tomorrow, could be very interesting in terms of trading that pair. If not tomorrow, then the next week, and certainly could make be an interesting break for the those of you trading the yen crosses. Again, I made a comment earlier about the U.S. election. That's I believe it's still being held on Tuesday. I don't know if there's going to be any delay based on the impact of Hurricane Sandy on the northeastern United States. But assuming that election does proceed, and we discover who the next U.S. president is going to be, this would be during that discovery would probably be settled. I'm guessing during next Wednesday's Asian session. That could very well unleash some funds, whether it's capital into the U.S. equity market, perhaps. Who knows? Maybe even some capital overseas. That could certainly affect the currency market as well. So Wednesday could be a notable day in the currency market, if only because we have some clarity in terms of who's going to be parked in the White House in the U.S. over the next 4 years. Next week also brings, by the way, some central bank meetings. Checking the schedule for dates on those. Yeah, actually the market, the consensus forecast is for a rate cut by the Australian Central Bank from its current 3.25% down to 3%. So that could certainly shake up the Australian dollar, especially if the RBA, the Reserve Bank of Australia, does not make a rate cut. That during Tuesday's Asian session, that RBA policy decision. And Thursday, as it often does, usually one of the first Thursdays of the month will bring both the Bank of England and the ECB rate decisions. So those are ones to watch as well. A notably quiet room here. One pair I wanted to show you, I think it was the Euro CAD. Speaking of another Euro pair that's been trapped in a recent range. But tradable, by the way, but very tradable. That's the Euro CAD. The 1.30 zone for the recent highs, 1.28 for the recent lows. I've got a blue line at about 1.28. This is a 4-hour chart for the Euro-CAD currency pair. And 1.30 has put a lid on the Euro-CAD recently. Yeah, if we ever get some resolution out of Europe, either on the Greece or particularly the Spain issue, there's definitely some upside potential for the Euro-CAD, at least in the near to medium term. And so the idea would be on the Euro, at least beyond the technicals, the idea behind at least a near to medium term Euro-CAD long would be more clarity about the situation in Europe, specifically in Spain, plus perhaps the Canadian economy weaker than expected on the back of that recent Bank of Canada Business Outlook survey, plus maybe again some concerns about the U.S. fiscal cliff issue. Let's put it this way: I would not ignore the opportunity to buy this Euro-CAD currency pair on another test of the 1.28 area. Maybe it is until next week we see that, but certainly something I would keep my eye on. I think I'll take the rest of this time to make a couple of comments about some developments or at least one development I can reference at boot camp, at FX boot camp. First and foremost, what I haven't said this much lately, but I certainly am available to do this. Anyone seeking, hang on a minute. Anyone seeking private mentoring, I am available to do one-on-one mentoring. And you can reach me at Curt@fxbootcamp.com. I haven't mentioned it that much lately, but if anyone seeking some private one-on-one mentoring, I am available for that. So feel free to contact me about that. With regards to boot camp, and again, I don't mean to abuse the privilege here of doing these webinars with this kind of a plug of boot camp. So I'm going to keep this very, very, very short, and I appreciate the patience here while I do this. We are going to be we look to be starting this this new program of market alerts, and actually, it's not a trade alert per se, although some of them could be interpreted to be as such. It's going to be more of a thing where, let's say, for example, let's look at the dollar yen. I'll give you an example of what this could entail. I might, during the course of my New York morning coaching session, might be, let's say the dollar yen during my coaching session was some 20 pips shy of that 80-50 zone I mentioned earlier. I might post a video saying, hey, I mean, I'm paraphrasing, by the way. I wouldn't literally say this, but I might say something to the effect of, hey, the dollar yen is approaching an important area. It may be an opportunity for the Japanese yen bulls, maybe those who can sell the dollar yen, or perhaps you're short the Japanese yen in some fashion, long on one of the yen crosses, and that's a profit target for you, or you're hoping for that the dollar yen eventually breaks above the 80-50 zone. Again, these would just be short videos referencing major currency pairs approaching usually multiple sources of resistance in the case of a rising move, or multiple sources of support in the case of a declining move. So anyway, I don't want to give you a heads up that there's we on a regular basis will be publishing these sort of like market alert heads up sorts of videos, and likely morph eventually into a paid service. Especially handy for those who don't have the means or the time to attend a trading room on a regular basis, but just maybe someone's doing some work but trades periodically in the midst of work and wants to kind of be aware, have somebody watching the market for them and be aware when something significant's about to happen. Yeah, I'm usually not grasping for straws here as to what to talk about, but given that the scheduled time of this event, it's almost we've almost reached the scheduled end of the event. I thought of just a few minutes ago that if I dive into some of the topic, I'll end up talking for 15 or 20 minutes and go well beyond my allotted time. So that's why if I've been pausing here, and it's why I did that little plug on both the mentoring and also the new Market Alert program forthcoming from FX Bootcamp. Yeah, Greg, I see your comment about the Pegler's alerts, and it's a work in progress, I must say. Again, I don't know what. I'll be honest with you. I'm not a big fan of the trade alerts per se. I do like the idea of at least the way that our chief currency coach, Roy McDonald, has described them, which is market alerts. Again, at the very least, those seeking solely trade alerts may not always get something that seems and sounds and feels like a trade alert, but it will often be something like what I call a market alert. Just sort of a heads up, hey, because I know some during the course of my mentoring and even in watching some other things posted by others about foreign exchange, I know some traders, for example, who simply have difficulty identifying trend lines. Even some, believe it or not, who don't use pivot points. I think those kind of folks are fairly rare, but it happens. So, especially for the newer to intermediate level trader who's trying to get a better handle on, what do I watch, or what do people watch, what do veteran traders pay attention to. The videos will still be an educational experience, but even for those who've been there and done that in terms of trading and just don't have the time to monitor the market on a consistent, regular basis for hours at a time, you've got someone kind of watching your back, so to speak. Anyway, and last question. Actually, last statement I'll make, and as long as maybe it's going to only give me like 15 minutes here or whatever. For as long as the FX Street moderator wants to leave the room open, I welcome that. But and actually, you know what? Feel free to contact me about email about this. Beyond anyone who has interest in private mentoring, here's my other question or my other point. If you have a specific topic that hasn't been covered lately by another presenter, a topic you would like to see discussed in great detail during an event like this, a 45-minute webinar, let me know. Now, I can't guarantee I'll cover it because maybe I'm not equipped to cover that. Maybe it's not my area of expertise, but I would certainly welcome any and all suggestions about topics to cover. For example, I did a recent presentation in our room at boot camp on trader psychology. I've talked about trader psychology here in the past, but it's been a while. So, I could literally next week, for example, spend almost the entire 45 minutes talking about issues around trader psychology, specifically as they apply to dealing with this particular market. So if you've got a topic that you see covered, even though the general theme of this event is kind of a look back at the past few trading days and highlights of what's happened, and a look ahead at what the next few days might bring for the currency market for the major currency pairs. I can certainly in any given week deviate from that general agenda and focus on a specific topic if there's interest in it. Arvind, I have in the past, haven't done so as much lately. I'm not saying there isn't a place for them. I just personally haven't done so. Maybe there could be a bigger role for stuff like that now. Now that the challenge with applying so many of these different technical tools is that technicals on some days and some weeks have mattered so little, given the market sensitivity to events in Europe. But now that Europe is, at least for the moment, stabilized, and maybe some of those technical tools like that could have a bigger role to play in defining one's technical analysis. But I'll be honest with you, I am first and foremost a a price action based trader. I don't. I use. In fact, you can see it on my charts. I keep technical indicators to a minimum. By the way, folks, I want to be clear. That's not because I just don't have the mental capacity to handle that. Folks, for those who don't know, I have a master's degree in applied statistics. I've actually done some work in the past in developing my own indicators before I was, and soon after I became a coach at boot camp. So, I mean, I've got the cred or the knowledge, if you will, to not only understand but even create some custom indicators. I've just simply found over the course of trading for several years and coaching for about 5.5 years, that, and especially found in recently that trading not entirely but largely on A, price action, and B, fundamentals, news, call it what you want. I mean that dominates my my planning and execution of trades. What I find interesting, though, is that when it comes to Gartleys or anything else like that, is when it is interesting when a multitude of things come together. Whether it's oscillators like stochastics and trend lines, moving averages, and stuff like Gartley. When all these things do converge and tell a similar or same story, that can be very compelling. Again, that's an interesting one. Statistics and trading. I like that idea. Yeah, Gam, I may have to deliver that as soon as next week, but I am going to I'm going to give that one some serious thought. I bet I can come up with enough material to cut. Well, actually, probably could even wing it right now, but of course we're in another recession. Let me write this one down. Yeah, thank you for the recommendation there, Gam. Yeah, Gam, I see your latest comment. Arvind, I was simply, I eventually scrapped about everything I was working on. Believe me, Arvind, I tried, but did not find any holy grail there. Arvind, one of the first things I did was I was trying to tear apart the classic existing indicators, which I could show you on some of my charts here. I spent a lot of time at one point trying to tear apart and optimize settings for the likes of stochastics or MACD. But I also tried to blend some indicators and kind of come up with a single indicator that represented a multitude of indicators, and there's some other things. And I'm not trying to dodge your question. I'm just saying to get into in great detail what I was working on, it would take some time. And I really found out for all that effort that it was kind of all for naught. That there are some things that work sometimes, but not everything works all the time. And especially in recent weeks and months, maybe not so much lately with things sort of stabilizing in Europe, but so many indicators I found, especially after the onset of the global financial crisis, so much of this stuff mattered less, and what mattered more was headlines and news flow. Anyway, thank you very much for your attendance, for your time, and your participation. I really do appreciate that, and I do appreciate, although I haven't seen anything from anyone at FX Street, I appreciate everything FX Street has done and continues to do, not just for these particular events, but for Forex traders in general. I'm sure many of you would agree to that. And, well, unless something notable changes, I'll be back doing this again next week, and if not next week, then the week after or so. Maybe I hope to bring maybe a different topic to this event. I mean, not a permanent change to the general topic here, but just mix it up a little bit. Hope to mix it up. Folks, have a great day. Thank you again. Cheers.